Daytrading Radio presents a Briguy trading production.
Good evening, boys and girls, traders. Oh, and Learjet too. Good to see you. Thanks for joining us here tonight on Daytradingradio.com. This is Briguy's Tools of the Trade, and we have a show lined up for you tonight that I hope you guys can find some interest in and some benefit from. Not one of the most favorite subjects I think people like to talk about unless you're in the biz, as it were, but definitely I think, and likely you guys will agree, a very valuable part of the team, as it were, if you're going to be a professional trader. So what we've done is we had a survey that we posted in the room in the actual homepage, as well as the emails that went out to you guys, and I actually got quite a few of you responding with some of your questions, and I really do appreciate that. You may have heard some of these topics covered in the past, and I don't know if those videos are even on the site or not, but this will certainly be a good addition to our shows here. So what I'd like to do is invite our guest on. If they have the Skype lined up, I didn't exactly get a number that I would be calling, so I will just leave it out there that when the guest is ready, they'll call in. But while we're waiting for that, we'll talk a little bit about accounting and in regards to taxes. So accounting, of course, is something that we dread. And this time of year, as we're getting ready for tax season, and I say getting ready because I'm thinking in lines of how accountants are. If you manage a business and you already have an accountant, they've probably already reached out to you to schedule a time to come out and take a look at the books and get things in order. You've got deadlines that are coming up, and I know some of you are international members, so you obviously have different rules for your country, but here in the States in generally speaking, we have some corporations that are required to file in March. You've got individuals that are required to file by April, and of course there's always a way to file an extension for those things, and so you can get that dragged out into September and October. And if you're like the federal government, you can keep kicking the can down the road, as it were, as long as you're willing to pay the price in regards to any penalties and whatnot. But the calendar doesn't stop. The dates keep flowing by, and those times keep coming upon us. And the lovely thing is that our friends over at the Internal Revenue Service enjoy traders so much that they have created a separate set of rules that you guys get to follow. And when I say that in complete sarcasm, because the fact of the matter is they're not very helpful in that regard. Okay, so I'm going to answer the call here and hopefully not have my computer lock up on me, which would be handy. And I believe this might be our guest calling in. Is that true?
Yes, it's Courtney Kurisko.
Okay, Courtney, thank you for coming on the show. Appreciate it.
Oh, thanks for having me.
So hopefully we got the audio set okay, and the guys in the room can confirm that they can hear the guest, and I'm not just talking to myself. That's always a benefit. And I see some people saying hello, so that might be a good thing.
Nice.
So I know you and I have been trading some emails here, and I try to do my best to summarize some of the comments that we got, the feedback from some of the members. So I don't know that we'll have enough time to get into all of the questions, But what we could do perhaps in the beginning here, Courtney, is to introduce you and your firm and tell us a little bit about yourself.
Right. Well, as most people know, I am John Kurisko's wife, and he's lucky he married a CPA with all the trading he does. That's kind of how I got into specializing in day traders back in the, I'd say now about 12 years ago. I have been a CPA in New York for a while, but I took on so many day trading clients that I left my firm about 5 or 6 years ago and started a firm that focused strictly on day traders. So that's what I'm doing. I'm based out of New York. We brought on a partner this year named Chris Benju. He's based out of New Jersey to handle the inflow of traders. So that's about it. Yeah, we strictly do day traders, but we, obviously traders have other investments. Their partners have, other jobs, other companies, etc. So we do have a wide range of skills.
All right, so if we have a trader whose wife has a business, and or I should say a husband has a business, we do have some women traders on the show. It's not that you're going to be turning him away and let them fend for themselves. You'd be happy to help them out.
No, we both have extensive knowledge in various areas, but we just chose to specialize in this one,
right.
This one area.
And why is that? Why do you say that being a day trader or trading as a business, why does that need a specialized accountant?
Well, I mean, there's the day traders really need to be set up correctly in the beginning. If you don't make the correct elections or set up your business correctly, you are subject to possible IRS audits, or you can technically lose a lot of money by not doing things such like making the mark-to-market election. So, if you end up not making the election to classify your trading income as ordinary, and you end up with a $200,000 capital loss, then it's a little more tricky, to make that election, because now you're limited to $3,000 a year in capital loss carryovers.
Mm-hmm.
So, so you definitely lose out on a lot of possibilities. So, yeah, we just want to make sure. I love getting the phone call when somebody is just starting their day trading business. That's the best phone call to get. So.
All right. So we've had some new members join the site in the last month or so. So if you guys are not already set up as a business and you're thinking that that's the direction you want to take, then this is really a good time to have these conversations, right?
Right.
Okay. And we'll share your contact info at the end of the show. I have it here from one of the messages. And, of course, afterwards, you guys, I'm sure, will be able to figure out a way to get a hold of Courtney because she already revealed her connection to the site, which I thought we were going to keep that secret.
Oh. No, that's okay. I mean, everybody knows. It's no secret. It's
no
just,
secrets.
I know sometimes John likes to talk about his family life a lot, and I don't always want my personal life out there as a CPA, so.
Understood. Right. Well, they have a lot of fans here, and they care about John and Paul for that matter. The two of them. Anyway, we won't get into that. That's another show.
Yeah. Right.
All right. So, having an accountant on the team, in the outline I sent you, I kind of had some points about why we want to do that. You kind of mentioned a few of the things about getting set up properly. Maybe you can talk to us about what it is to be trading as an individual retail trader, which many people on the site are, versus doing that transition where trading is a business for you and taking advantage of the tax benefits.
Right. I mean, I think a lot of confusion lies that traders assume that if they don't make the mark-to-market election and they don't form an entity to trade through, that they don't qualify as a day trading business. And that really is an incorrect assumption. That you can, if you do meet the IRS guidelines that we'll talk about later, you can actually be a day trader as a sole proprietor. You don't have to file any extra paperwork. You can put your expenses on your tax return, and your trades, you don't even have to make the mark-to-market election. Your trades go on your Schedule D. So you can even be a sole proprietor and make the mark-to-market election, and we can talk about the mark-to-market election at any point, because I'm sure that's, in the minds of traders when they hear the word tax. So, there just really are a lot of different options, and usually when I do my consultation call, with people. I try to get a background of what their interests are. Are they looking for retirement planning? Do they have a significant amount of money in their brokerage account? Sort of things like that. Are they going to bring in other members or outside investors?
Mm-hmm.
So really all those factor into how you're going to classify yourself as a business.
Yeah, and that's a good point too, because this whole system that we're talking about, there is really no one set of rules for each, for a group of people. It is so complex with all of the factors and the ones that you just mentioned that you need to have those consultation discussions and find out what somebody's interests are, what their goals are, and it's not just about filing the return once a year.
Right. So,
yeah.
Oh, go ahead.
Well, I was going to ask you, we often talk about accountants around tax time, but what types of services can you help traders with throughout the year?
Well, that's definitely a good question. Throughout the year, really just want to make sure that they're keeping track of their expenses, that if they have a large gain, that they're paying the appropriate amount of estimated taxes on a quarterly basis. Usually with an entity, we try to have them send us the bookkeeping on a quarterly basis, so we don't really get backloaded in February, March. So really just keeping an eye on where you're at, and hopefully you have some large gains, and we get a call in August saying that you need us to calculate some estimated tax payments.
Okay, excellent. Well, I think that takes us to the typical trader questions, unless you did say you wanted to make some comments about what's been going on in the news. Do you want to maybe cover that first?
Yeah, this is all really interesting, and it's hard to get a lot of information right now. All the accounting journals and regulations from the IRS,
Mm-hmm.
nothing is real permanent at this point. People seem a little hesitant to write it down, but for the most part, traders aren't really going to be impacted by the new tax law changes. I think the biggest impact is going to be this 3.8% that people are calling the Medicare, the Medicare tax on incomes. Are they calling it Obamacare? What is?
Somebody did in one of the questions.
Yeah, one of the questions. So, and really right now, we are waiting on the regulations, and the IRS says that those will be out in 2014. But the problem is that they expect accountants and taxpayers to follow the regulations in 2013. So really, we're just following the proposed ones, which do say that this net investment income, and day traders do qualify, that they are subject to the 3.8% tax.
And that's 3.8% on what?
On net investment income.
Okay.
And it's applied, so it's 3.8% Medicare contribution tax on net investment income. So,
and does that matter if a person is a sole proprietor day trader or has a corporation set up?
Not according to the IRS. It just says if they do profit off. I'm trying to find my notes here.
Mm-hmm.
How the IRS worded this. Hold on just a second.
Yep.
Okay, so the tax is the 3.8% of the lesser of net investment income, or the amount that your modified adjusted gross income exceeds the threshold, and the threshold is the 200,000 I'm sure everybody's heard of.
Right. Okay.
So, go ahead.
I was listening to a radio show a few weeks ago, and one of the comments that was made, and this was before they had finally agreed to extend the deadline on these things, is that whatever decision Congress makes, the IRS needs about 6 weeks to get retooled for any system. So here they were ready at the end of the year to go into the rollbacks and everything that was supposed to go into effect January 1, and the government wanted to change those things, but they are not ready to just throw a switch and everything's automatically changed. So
right.
they do take, and that seems like what you're describing is that there's so many different directions things can take, and not to mention the fact that the law could be one thing, but how it's interpreted and how it's applied is another thing, and,
right.
and that could take time for it to all play itself out.
Right, that's exactly the point, is that traders are arguing that their income is not net investment income, so why is it subject to the 3.8% tax? And the IRS actually put out a specific section, IRS code, which I won't bore everybody out there, but it does specify that trades and businesses to which the tax applies, and it actually lists a trader business in the act of trading in financial instruments or commodities. So again, we're just working with the regulations, waiting for something to come out that's published, more specific. You know, who's going to fight this? Is anybody going to take this to court this year? So, and I'll keep it constantly updated on my blog. So yeah, and the IRS just released that they're not even going to accept returns until January 30th. So I see
Lovely.
something. I know. I just glanced over to the chat room.
Yeah.
Self-employed tax will go up also, everyone. Right, they just, everybody's payroll tax or self-employment tax goes up the 2% Social Security tax.
Right. Or it goes back to what it was,
Or it goes back to what it was.
a couple years ago.
It expired.
Yeah, the extension expired on that. So I forgot to mention this in the beginning, and I think you guys have been watching enough shows to know how we work this, and that is, in this case, we did get some questions ahead of time, but by all means, if you have questions that you'd like to bring up, and and they're not the ones we've already covered, we'll certainly try to get to them in the time we have. So in the main chat room, if you could just put my name in the message, that'll bolden the message for me, and then I'll keep track of those questions. So that's lovely. It sounds like still too many questions to deal with when the IRS doesn't even know what it's going to have to do. And
right. They need a whole month. So
and who knows what's sitting on somebody's desk in Congress to even change it further. Right,
exactly. So yeah, this will be an exciting year for us accountants. But yeah, like I said, I mean, really, that's the biggest impact. Traders, a lot of traders. Well, I shouldn't say a lot, but don't always have the income over the $450,000 that is going to have that significant increase. And if you are over that threshold, then definitely talk to an accountant, because there's some other things that you can do. You can trade through C-Corps, etc. So there's a lot of different strategies for that. But really, traders are getting hit with the payroll tax, the investment income, the itemized deductions are subject to phase out, but a lot of traders, we recommend that their business expenses go, they're considered sort of above the line, so they aren't subject to this phase out, so that doesn't apply to them.
So I think that kind of overlaps on one of the questions from someone. So what you're saying is that your deductions then, not so much having it on a Schedule A, but if you have yourself as a sole proprietor, then you can write these off as Schedule C deductions.
Correct.
Okay. And to have a Schedule C and a sole proprietor, that's there's not too many hoops to go through to set that up. So definitely, like we said earlier, there's a lot of things very specific to your needs as an individual, and if you are set up as a business already, there's things for you as a business. And there's all these websites out there that you can go on there and you can register yourself as a corporation, and you'll get the stamp in the mail and the seal and everything, but there's always a chance that something's overlooked, because as a trader you're either eligible for unique opportunities or you're subject to unique circumstances that an accountant with the experience that Courtney has is really going to benefit you guys. So just give that some thought. I'm sorry.
Oh, no, I was going to say that also really for the 475F mark-to-market election, too, that there really is a very strict timeline on that, and the IRS really doesn't give any leeway. So that's another reason this all needs to be thought about before April. Even if you file an extension, that decision about the mark-to-market needs to be made before April.
Okay. So before we talk about mark-to-market, maybe we can explain to the audience what the IRS looks at for someone to be considered a day trader, and how that's different from when we talk about the pattern day trading rule that you're subject to from your broker.
Right, exactly. So a broker says you have to have $25,000 in the account and 3 trades in a 5-day period. Everybody's seen that. And then the broker says you're a pattern day trader, and they may even take your account and market to market for you, etc. So that really has nothing to do with the IRS. The IRS has put out pretty straightforward information, but it all comes down to these court cases in the end. They have, and I have some information on my blog too. So topic 429, if you go on the IRS website, and they just really focus on the frequency and the amounts that you trade. They expect you to profit off short-term swings in the market and to have it as a full-time job. Now, I get a lot of traders that have a full-time job but manage to trade 40-plus hours a week, and they have 2 or more trades a day, and that's always a little bit of a risk, having them file as a day trader and make the mark-to-market election, but it really hasn't been challenged. On my end, there have been court cases, and I can always publish that stuff on my blog. So really, the IRS has set out guidelines, but it comes down to, if you get audited, what the auditor decides to, how the auditor decides to calculate it. But I usually tell people that they're usually safe with around 2 or 3 trades a day. So, and I always tell traders to keep a journal, because a lot of times you have, you're just monitoring your positions and you may not find a specific trade for that day, and those days are important to keep a log of what you're looking at to prove that you were sitting there in front of the computer, researching, watching for a trade. So.
Yeah, and we talked about journals on one of the earlier episodes, and it could be something as simple as a notebook. I've seen traders with a whole bunch of yellow pads and to pages just crinkled, folded back on themselves, and a whole pile of them somewhere in order of, by what month it is or whatever. So it's not that you have to have some kind of organized template and you're filling in squares in each column and you're marking down, the price of the market every hour on the hour. But just having something to show that you're involved with this regularly. It's not that you're playing golf 5 days a week and you trade one day and then you're trying to say it's a full-time job.
Right, exactly. And a lot of people, I just say, because I can use John as an example. He's got a notebook with, trades are written all over it, and numbers, stock symbols, and all he has to do is put the date at the top of the page, really, because...
Does he do that?
Most of the time.
Just kidding.
But really, that's it. He's sitting there constantly researching, writing, and stuff, and like you said, they're not logged into a nice little Excel spreadsheet. It's just a piece of paper and a notebook, and just put the date on the top, and that usually, somewhat substantiates that you were, here trading. So, but again, there's so many other factors. It's really, there's a lot of court cases out there, and there's so many factors, because even if you have 2 stock trades a day, but some days you're trading options and you have options expiring, or you have unexecuted trades. There's just a lot of different factors that work in there, but just really profiting off short-term swings in the market and making it sort of your lifeline for income.
Right. And if you're a casual trader and this kind of thing doesn't interest you, then you don't have to do it. You just deal with your own typical deductions, and you can pay your capital gains. But if you're serious about trading and you want to do this as a business, or you feel like you have been doing it as a business and you want to shield yourself from any problems, then these are the things that you need to do on a regular basis. So the idea that you have to have 500 trades a year or 30 a month or 100 a month and all that, is there some number out there that traders can shoot for?
Yeah, well, the 500 a month is the 500 trades a year requirement. That comes up a lot. Again, it's all can be argued. I know I'm being very vague here, but it's just really the IRS interpretation is so broad on this that it's really hard to get a specific number. And I know court cases have come out that have given the specific number of trades, but I realistically don't always follow that, because I see traders, trading on a daily basis and doing exactly what the IRS says, but don't meet those number of trades. Now, I always let them know that they aren't meeting that requirement, that maybe they might be a little light, and I let them know what their risk is, and leave the decision up to them. So.
Right, because you're not cracking a whip on folks.
No.
It's up to them how they want to handle it.
Right, exactly.
But then again, this is another reason for talking to your accountant throughout the year. So
right, exactly.
If there's maybe, let's say you got sick for some reason and you needed to take care of yourself for a month or so, something serious. Maybe your spouse got ill. And now you're not updating some journal. You're going to lose your day trading status. Some people like to call it a status, but there is no checkbox on the IRS form. So these are the kind of things an accountant like Courtney can help you out with.
Yeah, definitely. And I see here in the chat room somebody saying, making jokes about Johnny's books. But yeah, I was just using him as an example. They were making dog eat jokes. It's kind of fun having the chat room up here.
Yeah. Yeah, we have some regular jokers. There's a question I was going to say for later, but maybe we should get to it immediately, and that is, as your business, do you handle clients that are out of state, out of country, or is it only in New York and New Jersey?
No, we are able to handle international and national clients. We use a secure file sharing system, so actually most of our clients are spread all over California, Oregon, potentially have one in Jordan now. So yeah, it is definitely very possible in this day and age to not have to sit face to face with us at all.
Okay, so that should answer quite a few questions that we had. And while we're on that subject, we did have some folks ask about having their brokerage account out of the country, and we know that John's been using the Shore Trader account, and many of the members have also opened up an account. But I know I've talked to some that are just reluctant to open up an account out of the country because they're worried about how what's going to happen to their money and how the taxes are going to be handled. I mean, some of that's more of a legal question, but is there any light you can shed on how that would be handled?
Yeah, really, having that account, the Shore Trader account, does not affect your, whether or not you qualify for day trader status or can operate your day trading business. So, no, that really isn't a factor.
Okay, so I hope that answers some of the questions that are out there. And I know for some of those that have signed up for that brokerage account and they notice it says that they're not going to get a 1099, that doesn't stop you from declaring that income or loss on your return. The 1099 is just an informational return.
Exactly.
And so you, for your part, they will of course give you a list of your trades, and it's similar to a 1099B, but it doesn't mean that you need to rely on that form in order to file your return. And for that matter, for none of your brokers, if for whatever reason none of them sent you a form, that doesn't stop you from declaring your income. Absolutely.
You've done your research. Good job.
Okay.
Absolutely. Yeah, the trades still get reported, and and that brings us to the software issue also. I mean, a lot of brokers won't match up your trades for you, or if you've made the mark-to-market election, you need to do a little bit different accounting because you aren't subject to wash sales, etc. So, yeah, you still have to have a way to report those trades, and we usually recommend traders get trade log for that very reason, and we can always assist you with that software because it is a little tricky if you have options, etc.
All right, very good, very good. Now you've mentioned mark to market a few times, and I don't see a lot of questions in the room, so I hope you guys are all right. We're just going to stick with some of the questions that were submitted earlier, and yes, to those of you who are late, we'll be happy to archive this and let you listen to it from the beginning, or next time get your DVR out so that you won't have that issue. But for now, the question about mark to market, now that's an election you have to make every year, or not every year, but once at one time in your lifetime that you decide you want to do this, or for your business anyway. So how does that work?
All right, so if you're going to make the election as a sole proprietor, it gets filed on your personal tax return by April of the year that you're going to make the election. So if I wanted to make the election for 2013, I need to make that election by submitting a notification with either my extension or my tax return by April 15th. And, I have the wording is all over the internet. I have it on my blog, on, Green Trader's got it everywhere. So, but just really the deadline is very important. And then if you're forming an LLC that is making the election, or an S-Corp, then the election just goes in the books and records of the company. Mm-hmm. But in both cases, when you file the return in the year that you made the election, you just really need to note it on the tax return, and more information is better in that case. So,
all right.
Yeah, it's pretty straightforward. It's just really in deciding whether or not to make the mark-to-market election that I usually advise people to talk to a professional.
Okay. And just to be clear, can I declare mark-to-market for 2012 right now?
No.
Okay.
Good question.
Okay. So when you're talking about filing it with my return in April, that's to make the election for 2013.
Correct.
However, if I open up a corporation in 2013, I can make the mark-to-market election right away.
Yeah, you can make, anytime you open up a corporation, mid-year, August, September, you just make the election internally. So, and then if you traded, say you traded 6 months as a sole proprietor and did not make the election, then those trades are considered capital. And then in August, or halfway, so let's say 6 months, you make you form the entity, you make it internal, so those trades are going to be considered ordinary income or losses.
Okay. So there you go. Again, this is where an accountant will help you out in those nuances there. That's what Courtney's getting at. And as I've heard it explained once before, if you have a situation where you're carrying a lot of losses as an individual trader, and then it starts to click, so to speak, and maybe you're following some of the HPS setups, and they're starting to work out in the last few months for you, and now you're starting to reach a point where you're washing out all those losses, and you're starting to make some money, and you can benefit from the mark-to-market. Well, then here you are in the middle of the year, a good time to think about opening up that entity, let the trades of the past wash themselves out, and then make your future trades through the corporation.
Oh, very good. Yes, exactly. You've been talking to an accountant?
Well, I've been paying attention, yes.
That's good. That's great.
I don't do any of this myself, but I do.
Yeah, that's great. Yeah, I mean, because the capital losses are subject to $3,000 per year. So, if you have this huge capital loss and you make the election, then you have a, say $200,000 carryover that you carry forward indefinitely, with $3,000 a year. So, unless you have other investments to offset that gain. But, yeah, you are very correct in how you explain that.
Okay. And when you do say $3,000 a year, that's if you're filing married, right?
Correct.
So if you're filing individually, a lot of single traders out there, you only get $1,500. Sorry, guys.
No, 3,000. Sorry, 3,000,
so,
and the married filing separate is 15.
Okay, married separate is 15, married joined is 3, and single is what?
3,000.
You do get 3 as a single. Okay, I didn't realize that. Obviously, I'm not single, so I wasn't doing it that way. All right. Well, you know what? I think we've done pretty good getting through a lot of these questions. I know we did want to keep you on the air forever and ever. I hope things are going all right. Let you guys know again, if you had any other questions that we didn't get to that you'd like to ask about, this is your opportunity. So feel free to post those in the room. I see we have a question about dividends in the room. If you're a day trader, are your dividends taxed at a different rate than capital gains?
The day traders, if you're a day trader, your status does not affect how your dividends are taxed.
Okay.
Because that's considered investment income.
Okay. So I didn't notice any other questions. If there's somebody asking an earlier question, then feel free to bring that up. But I know we definitely had some other questions from the survey.
Yeah, here I have them. I have them right here.
Okay.
If you have a loss in trading, how many years can you carry forward? So, as I stated earlier, capital as long as you live, less than the $3,000 a year. The net operating loss is 2 years back, and you carry forward 20. And then if you have a small business, then it's 3 years back and forward 20.
Forward 20 on a loss, you're saying?
Right, you can carry the loss forward 20 years.
So if you've lost more than 3,000 times 20,
that's for ordinary income.
Okay.
Sorry. So say you have a $100,000 ordinary loss, you can carry that forward 20 years.
Deducting 3,000 a year.
No, that's capital. I'm sorry.
Yes.
Capital is you get automatically. They let you have the $3,000 a year. If you have an ordinary loss, the only way to use up that ordinary loss is to have ordinary income to offset it.
Okay. So where does the 20 years come in?
After 20 years, if you haven't had enough income to offset, say, that $100,000 loss, then it expires.
Okay. So go out there and make money. You won't have to have that problem, I guess. Yeah, because I know some folks that unfortunately 9/11 came and they were caught up in the trading at that point, or margin call or whatever, and they have a six-figure loss on the books. But the good news is, in their case, if they're going to be a steady trader, then as they're making their gains in the following years, they will offset those losses and minimize their tax obligation.
Right.
So, and yeah, I guess 20 years is enough time to make up a loss, right?
Oh, right.
Yeah.
So, so it's 8:40. A couple of these are pretty easy to answer.
Yeah, why don't you go ahead and go through them?
Just to help these guys out, or females. Do I need an LLC in order to deduct trading expenses? And I think we covered that. No, you could file just as a Schedule C sole proprietor. And then here's the Obamacare question. We covered that. Then we covered number 4. Number 5, I guess we have covered pretty much all of these. Oh, here, please explain traditional IRA and Roth IRA, why we need them apart from retirement. What advantage are they? So, I mean, that's a good question, because, if you're within a threshold, you can get a deduction for your contributions to the retirement. So there's tax benefits to that. But if somebody's just trading through a Roth or an IRA or the retirement plan, I don't always recommend that they qualify as a day trader, because really you need an account outside of the retirement.
Mm-hmm. So the money that you're trading with in that IRA, and as it grows in the IRA, you're not being taxed on it because it's not income.
Right, exactly.
And when you make a distribution from the IRA, then you're subject to the rules for distribution. And if you don't qualify for some of the exclusions, then you've got to pay a tax penalty for pulling money out of the IRA.
Right, exactly.
And in that case, is there any difference trading an IRA versus trading a Roth IRA?
No, so it's the same, because you're trading within your retirement vehicle. So it's not an account that, like as you just stated, that you can freely take money in and out of, pay yourself an administrative fee. There's no tax consequences to it. Well, except for in the end, when you take the money out of your IRA. But if you have significant gains.
Okay. And then as far as tax planning goes, I did mention in the announcement that I sent out that just because the calendar has closed on 2012, you can still do certain things to help out yourself tax-wise for 2012. And what would that be?
Wait, sorry, I was reading I have a hard time multitasking here. I was reading the chat room. Can you repeat that? They have some good questions in there. Go ahead.
I did see those coming through too. Just to finish up on the IRA aspect, and that is when, just because 2012 is over, can't we do something with our money to benefit our 2012 taxes?
Oh, in regards to making your contribution?
Yeah, maybe you could explain a little bit about what the contributions are, what the limits are, and what the deadlines are for getting that set up.
Okay, so traditional and Roth this year, you can do $5,500 in 2013, and you have until October of 2013 to actually make your 2012 contributions.
Wow.
So they give you until the final, deadline of your filing your return, which is October as an individual.
That's the extension date?
Right, exactly.
Okay.
So, I mean, it's gone up, $500 for traditional and Roth this year, and 401k, 401(b), and 457s are up to 17,500, I think, off the top of my head. So, but yeah, you do have all year pretty much to make your contribution for the prior year.
Okay.
So yeah, here's this question from Big Ed. Are short-term and long-term capital gains all considered unearned income? Correct. Those are unearned income, and they are not subject to SE tax. So, and then question 2, as a trader, is your income considered earned or unearned? Right. Well, that's why there's a couple different factors in that question. If you don't make the mark-to-market election and your trades are on your Schedule D, it is unearned, but that's why you want to pay yourself an administrative fee, and that goes on your Schedule C. If we're talking about sole proprietor here, or even if you had an LLC, you pay yourself an administrative fee, and that becomes your earned income. So that was a good question I wanted to address.
Yeah, that's a great question. So obviously, if you are an LLC, different tax return. So you won't be filing the Schedule C. You'll be filing your own separate. And this is where you come in, because I forget the name of the form.
4797.
Yeah, exactly. I had to expand my window because
LLC, sorry, 1065. I was reading another. I'm
Okay.
really not. I don't know how does John do this with the 7 screens up all day?
Well, I think when you see him at the end of the day, you could probably start to figure that out. So we had a couple questions earlier than Big Ed's, and maybe we'll just try to go through them here. I was told futures does not need all of that, just the profit or loss at the end of the year. Maybe you could talk about how futures are handled versus somebody with typical stock equity type trades.
Right, that's another good question. So futures are very easy to file. All you do is report the net gain or loss. You do need to keep the detail of the trades for your personal records, but you do not need to submit them to the IRS.
Okay.
And depending on everybody's situation, it's always different, but for the most part, we usually don't recommend making the mark-to-market election if you're just a futures trader, because the IRS is generous enough to give you a 60-40 long-term, short-term tax rate on your futures. So
Right.
it's a lot easier, but keeping... and then here's a question. Do I report option value on December 31st for an option being carried into February mark-to-market election? Your mark-to-market election is pretty much, you can think of it as closing out your inventory. So anything open at the end of the year does get closed out, options, etc.
All right. So you don't have to close the trade, but the value of that option at the end of year is what you'd have to log.
Correct.
And count on your 2012 taxes.
And that becomes your new basis going into 2013.
Okay. And again, if you have trouble figuring that out, that's why you get somebody like Courtney to help you with that, because she just lives for that kind of complex algebra. Can you change the election the following year? This might go back another 10 minutes or so when we were talking about elections. So once you make the mark-to-market election, can you undo that?
If you're still an active trader and you've made the election, it's pretty hard to undo that election. It's a lot of paperwork, and the IRS won't always accept it or even acknowledge that you decided not to file mark-to-market. Really, I mean, the only reason you would... What's the reasoning on that? Is that you're no longer a trader? I would think that would be the only reason you would undo that election if you have it. And if you're no longer a trader and you don't qualify as a day trader, then it's easy. You just stop filing as a day trader, and it's automatic that the IRS no longer acknowledges the mark-to-market.
Right. And if for some reason, and again, I can't imagine everybody's individual configurations, but if for some reason it benefited you to not be mark-to-market after an election, then I'd say talk to Courtney about opening a corporation, and then have that corporation operate not mark-to-market
right,
going
exactly.
forward.
Yeah, there are little tricks to do.
So that way you don't affect your individual arrangement and deal with, the A word from the IRS.
Right.
How much on average does it cost to start a corporation?
My fees to start a corporation are a little on the light side, but that's just because I don't really assist with any of the legal framework. I just really refer you to a lawyer. But I charge about $500 to do the paperwork filing for the state and federal, and then you just pay the state filing fees, and then I give you legal documents to take to a lawyer or to, if you have some business expertise, fill out yourself. And it comes with the stock certificates, etc. So about $500, and usually state filing fees usually end up being about $250, $300.
Okay. Would you get involved with setting up somebody who lives outside the country with a corporation?
That's a little tricky, and I've had that question a few times already in the month of January. It's a little bit different because I do have somebody that asked that question because they're currently living in the United States, but they're going to be moving out of the country, and what do they do with the corporation? It really just becomes a non-domestic entity. So there are, if that person wants to email me, I can explain it further, because I'm not sure how many people. I'm still doing a little bit of research on that.
Okay.
And how that affects them.
Yeah, and it's not something that you deal with all the time. In fact, I was thinking about this one yesterday with one of the companies I deal with. The company has licensed professionals, in this case engineering, and you have to be licensed in every state in order to work in that state. And there's an arrangement where you can get licensed in the next state over, let's say Pennsylvania. I live in Jersey, so let's say Pennsylvania, and you can establish a business in Pennsylvania by simply paying some office that will basically take your mail, and that's very legit. You pay them a monthly fee, and they establish the office there, and that's good enough for the board, the state governing board, to allow you to operate in that state. Is there any arrangement like that if I'm a trader that I live out of the country, let's say Canada, and I want to open an account? Some brokers won't let me open an account because I live in Canada, but is there a way for me to open up an address in the United States and work that way?
Really you can, and I it's a little bit tricky because if you don't actually have an office established in the United States where the company is operating out of and the books and records are kept, then I can't really recommend doing that. For IRS standards, or what they recommend. So I can't really recommend doing that if you don't actually have an office in the United States.
All right, so you won't hold their books then, is what you're saying?
No.
Okay.
But if their mom lives in New York and you keep the books and records there and you come once a month and that's where you operate your administrative work, then that might be an option.
Yeah, you might be able to legitimize it that way, sure.
Right.
All right, so here's a question about incorporating in different states. Does that a factor that we should think about?
Really for traders, just because, I don't always recommend it. Usually it ends up being extra paperwork for not so many benefits, but of course a lot of people talk about Delaware. So, but again, that's really down to a specific individual or corporation and why they're looking to, obviously for tax benefits, but what other purposes they're looking for to do that. So, but they're really, the paperwork you end up filing and the fees don't always make up. If you're a trader, say, an average trader, you're really not getting much benefit out of that.
Okay. Are we sure that the contribution deadline is October and not April for the 2012 contribution?
Yes.
Okay. And kind of skimming through the rest of these, I think we did pretty good. Traditional IRA contribution deadline is in October. Yep, yeah, we got that answer already. And I hear what you were told, but you got an answer. I don't know what more we can do than that. Let me look at the spreadsheet, see if we had anybody throw a question in after I got you that email. I think I got you all of them. We talked about short trader and the Roth IRA. Yeah, those are all the questions there. So
yeah.
I think we did good.
Yeah, definitely. So thanks for having me on. My website is ckaccountingandtaxation.com, and my blogspot is daytradertaxes@blogspot.com. So just email me, and I'll set up a time to consultation. We don't have any administrative staff, my partner and I, so we work pretty good on emails and then set up time for phone calls. So it's not like I have a secretary here answering the phone, but definitely email me with questions and a consultation. I usually try to keep them at 15 minutes. If you need advice from me, specific advice, I can bill you, on the half hour,
Okay.
or we can talk about having you as a client, part of the team over here.
Is there a Day Trading Radio member discount?
No.
How dare I ask?
I know. No.
All right.
Not yet. I mean, I haven't really talked to John. That subject came up a little while ago, last tax season, but we haven't.
How about a 1% discount?
Yeah, we can think about it.
We could think about that. All
I'll
right.
somehow find a way to track it if you click on my link through the Day Trading Radio. Or if you say Day Trading Radio when you call me, I can give you 1%.
There you go. I'm working for you guys. I'm
Okay.
trying. So, got you something. And your email address, is it the Yahoo account you want to give out?
Right now it's the ckaccountants@yahoo.com.
Okay, so that's CK, that's for Courtney Kurisko, accountants, that's plural,
Right.
at yahoo.com. So feel free to flood her with a whole bunch of ridiculous with any kinds of tax questions that you might have. And obviously, she does this for a living, so you guys could be expecting to talk to her on a professional level and work out some kind of financial arrangement there. If you want to get non-professional answers, then you can keep asking me, and I'll be happy to.
Actually, you do a pretty good job.
I try to. Just dangerous
you did your
enough.
research. That's great.
Just dangerous enough to get you in trouble, as they say. I
Yeah.
did learn something new recently, which is that your futures losses, and I know this is a shocker to some of you that I might have futures losses, but your futures losses and your stock losses, if you have any, they're both combined together to make that $3,000 cap. Does that sound right? If you're as an individual?
Correct.
So, you're not taking the full nut. 60-40 aside, you're not taking the full amount.
Right, and did you know you can carry back your futures losses to offset?
That's what I was going to ask you. Yes. So let's just wrap up with one quick little thing. So let's say you did really well for a couple of years with your futures trading, and then 1 year, for whatever reason, you got caught up in the fiscal cliff, and you went over the edge. So you've got, let's just say, $5,000 in losses by the end of 2012, and you can't deduct the full $3,000. You can deduct $3,000, but now you got another $2,000. I don't know if $2,000 is worth doing, but what would you have to do with the extra money?
You just go back 3 years, and if they're absorbed in the third year back, then you don't do it. You just amend the tax returns until they're absorbed. But
Okay.
Right, if it's 2,000, you do a quick rundown of what the tax benefit would be on that versus what you'd pay your accountant to amend the returns.
Okay. So maybe 2 is a bad example, but
but definitely you can go back 3 years. You start with the third year, and if they're not absorbed, then you go to 2 and then 1.
Is that just the futures, or is that also with?
Just futures, not stocks.
Right. So just futures, and also I believe straddles if you are involved with that.
But you have to have
normal
and you have to have those in those years.
Yes. Oh, okay. So that's another thing.
Futures and the
if you just
straddles.
started trading futures 2 years ago, then you can't carry it the third year back.
Right.
And maybe one last question here to somebody's talking about wanting to transfer a 401k into an IRA, and there's a couple of personal questions for that. I know. What would you say about that?
That's last year, 2012, I was advising it more than 2013. I really want to, think out a new strategy this year. It depends on the amount of the 401k, and obviously you're going to be. I always say that to pay taxes, to prolong the payment of taxes is better. So, again, that's really an individual situation that I look at.
Yeah.
But
and if you're going to do that, you might. Looking into a Roth IRA is also something to consider.
Right.
or a
Correct.
mixture of both
Right.
in some cases. So, if these are some questions that you can summarize into a little sound bite, and between Courtney's full-time job with the family and with the work, if she is on her iPad and she can shoot you back a quick answer, I'm
Right.
sure she'd be happy to do that. But as you could tell, a lot of these questions can become a little more involved. So
Right, exactly. And usually when somebody emails me and says I'm a DTR member and I just have a question, I guess that's where the discount comes in, because I give them a lot more information than I probably would. I just, feel for them for being a DTR member.
Oh,
I'm
really?
kidding. No, I'm kidding. But yeah, no, I definitely do that. So yeah, send me an email. I have no problem. If I have the time, I'll answer you. And
and don't email it on April 14th.
Right. This is a great time for questions. This is a great time for tax planning, because we can't even file returns right now. And this is a great time to think about your entity and to get together your business deductions.
Okay. And if I live in Canada and I've got a brokerage account in Canada that I'm trading with, and I'm trading U.S. stocks, do I need to file a U.S. tax return?
As far as I know, no, you don't, because you have no residency here, and you're not your brokerage account is not here.
Yeah. So I know if I trade Nokia, I'm paying taxes because it's like a U.S. ADR or
Right.
something like that.
They automatically, do the foreign tax, and then you get the deduction for that. You get a credit for it.
That's why the amount of the stock trading on the U.S. exchange is different from what it is in the other country.
Right.
But I am tired of giving my money to RIM. I think that's over. So, okay. Well, Courtney, you've been a great guest. We might be able to line you up with a T-shirt if you'd like, but we do appreciate you being on the show here, and hopefully you guys have benefited from it. And I'll post Courtney's contact info in the room in a few minutes, and you guys can take advantage of the opportunity there. And I definitely recommend that you guys get yourselves an accountant. If not Courtney, I mean, of course we'd like you to have Courtney, but if not, if your circumstances are different, that you need somebody next door to you there in Texas or whatever. But definitely a tool that is of benefit.
Right. Thank you very much, Brian. I appreciate it.
Okay. Take care, Courtney.
Enjoy the evening. Bye-bye.
Okay. So, if you're looking for bankruptcy papers, then you could probably do better than dealing with an accountant. That's definitely a different department. So, but I really appreciate the members that you have sent in the questions ahead of time, and I even got a few. I was able to put a little rating chart on there, and got some feedback on the rating of the shows, and I appreciate that. And all those of you who gave me a low score, I will be sending those email addresses over to RPM, who has a special server designed just for you. So we could take advantage of that. And that about does it for our show tonight. We've got the futures here on the screen, and you guys might be looking at it now. We're up 2.25 points. Just taking a look at that briefly. And what I'll do is I'll put on a couple of songs and let you guys enjoy your evenings. You got any requests, you can shoot it to me here in the main room. And if you missed the beginning of the show, we'll see what we can do about getting you a copy of the show in the members forum so that you can watch it from the beginning. So thanks for tuning in to daytradingradio.com. Again, this is Briguy's Tools of the Trade. And I'm going to sign off just so that we can lock down the episode, and then we'll sign back in. All right? Thanks, guys.